Hey you guys, welcome to OnlyTax, where
we give you the naked truth about how the tax system works.
alright, and do you want to talk about what is today's question from one of our subscribers?
Here's the question. My wife is a full-time real estate agent, so she qualifies as a real estate professional, REP. I'm a W-2 employee and don't meet the REP criteria. We file a joint tax return. I co-own two rental properties with a friend through a two-member LLC. My wife isn't part of the LLC and doesn't take part in managing those rentals. Because she is a REP, can we use the passive losses from those rental properties to offset our active income on our joint return? Or does her lack of material participation in the rentals mean we can take those losses?
Well, that's a very great question, Reen. So, to answer our subscriber's question, there's the good news and not so good news. Your wife's REP status can apply to your joint return. That's the good news. So, you're covered in that part. Well, for the not so good news, you still have to meet the material participation requirements for those two rental properties or for those two properties. Well, it can be harder to prove when you have a partner who's also actively involved in managing them. Right, Jason?
Yes, as I said, you are 100% correct. There is three criteria when it comes to being able to offset your active income with passive losses if you are a real estate professional and if you make more than $150,000 per year. Those three criteria are: number one, you need to have spent 51% of your time dedicated to real estate activities. Number two is you need to have 750 hours dedicated to real estate activities, which it sounds like your wife fulfills. However, the last criteria is you need to hit 500 material participation hours for your own property. So, since your wife is not managing the property, she's not materially participating for those properties. Therefore, unfortunately, you would not be able to use those passive losses to offset your active income. So, my recommendation is you guys look into getting a new rental property where you guys materially participate in managing the property. That means you guys are the ones managing the property, you guys are helping with the construction and other direct work with the property. Then you could use those passive losses to offset the active income. Also, if you guys have multiple properties that you guys materially participate on, one strategy that you could do is you don't have to spend 500 hours on each property. You guys can do what's called grouping, which is when you group all of the properties together for tax purposes. And then as long as you spend 500 hours accumulatively materially participating and managing those properties, you can use those passive losses to offset your active income.
Thank you so much for answering that question, Jason and Elisa. Want your question answered in the next Only Tax episode? Send them to our private Facebook group, REI Tax Hack. Your question might be next. This is Only Tax, giving you the naked truth about the tax system.